Welcome back to Dominating Your Investments. I'm Dom Rinaldi. I have a special guest today. I have Ayesha Tariq from FinTwit, and I know you guys have seen her posts on Palantir, and you probably saw her video presentation on Unity, which was awesome. We're going to just talk about stocks today. You know, I like to have guests and just talk about the nature of the market. I love to hear guests talk about their investing story so we can learn from them. And just really, there's a lot going on right now in the macro environment. So I thought Ayesha would be a great guest to have and talk us through that. So Ayesha, thank you for coming on the show. Maybe you could just give us a little background on your investor story.
Sure, thank you. Thank you for having me. This is really exciting. As most people know by now already, I was a corporate banker and I started my career as a corporate banker. I actually never wanted to be a banker or anything related to finance. I studied marketing, but at the time, the best job available was a banking job, stable, good pay. So I decided to take it. And once I got into corporate banking, learning about companies and what they do and how they grow, I basically fell in love because it wasn't so much about just giving them money, but it was giving them advice and teaching them how to use that money, right? And back in the day, this is like when I first started out about 18 years ago, bankers were revered. They were people who were, advisors. Nowadays, people don't see corporate bankers like that anymore, unfortunately.
This is true.
Yeah, they're seen more as sharks than anything else. But no, in those days, people really listened to what we had to say. And it was really nice to be able to see these companies grow from $10 million all the way to 100, 200, $300 million companies. And we had a part to play in it. So basically, that's where I started falling in love with, learning about companies and industries and, how they work and what they do. I have enormous respect for entrepreneurs and how they manage their business. We tend to criticize entrepreneurs a lot. Why is he doing this? Why is she doing that? But seriously, it's a really difficult job. So I came to appreciate this whole thing. And then obviously the next step to, banking is probably investment banking. So I decided to get my CFA. And once I moved out of corporate banking, I actually started to invest because when you're banking companies, you actually have a lot of inside information. So it gets very difficult to invest. I mean, you can, but there's just so many formalities and forms to fill. So I decided just to stay away from the whole deal. So of course I'd watch the markets because you have to, but I didn't actively invest until about 2016, which is when I left and I started managing the treasury department for a large local business over here. So the owner was investing, so I was also investing. I managed his investments and I managed my investments, and yeah, it worked out well. So that's in a nutshell my background. And then how I came to be on FinTwit. I mean, I'm actually quite surprised that you say I'm a part of FinTwit. It's quite nice to be, a part of FinTwit. So
it's a good community.
It is. It's an excellent community. So, when the lockdown and everything happened, and obviously, the markets started going haywire, and you have a bull market, and there's just so much happening, right? And I've always been on Twitter. I signed up for Twitter in 2009, and I've met some of my best friends through Twitter even. But then things sort of, you have people on your feed, people who don't agree with you, the whole thing.
Oh yeah.
And then, yeah. So about in 2020, yeah. So after the pandemic started, So I just started going through social media and things like that. And then I saw a couple of really fun tweets on stocks and investing. So I decided to clean up my feed, started following a bunch of amazing people. And yeah, from there, it's just ballooned into a whole nice community of people that I know, I can speak with, people like you. It's great. I'm getting to know so many great people.
Yeah, I think it's very unique. I don't think a lot of people talk about Twitter in those positive uh, that positive light because maybe they don't have that experience or are part of a community like that. But I definitely think the FinTwit community is a unique one. Obviously, there's still going to be trolls and people who don't agree with certain things, or if you don't have their stock on your top 10 list, but overall, I think everyone knows we're all in this together. We're trying to further our financial education and provide more for our families.
Yeah, I think that's my greatest takeaway from being on Twitter is how to be a little neutral. Okay, I've, I mean, it's not like I haven't had comments on my posts, but it's just I'm not saying I tend to ignore them, but I tend to be neutral with them. Everybody has their views. Everybody's entitled to their opinion. I am no one's mother. So uh, if they want, if they think they know better, so be it. It's
Sure.
fine. I have something to offer, or I feel like I have something to offer, and I put in my 2 cents. If somebody likes what I have to say, great. If they don't, tune out. It's fine.
Yeah. Yeah.
So yeah,
No one's
that
making you follow the person or buy their stock. You can short it if you don't like it. Um,
absolutely,
you know,
absolutely.
I always get that question around certain, and there's some people who don't like Palantir, and that's obviously my favorite stock. Um, and hey, if you don't like it, short it, that's fine. Or they'll ask questions or trolling questions and typically don't respond. But uh, my answer is always it's personal. It's investing is personal, right? It
Oh,
is
absolutely.
so many facets. Is it personal from what your time horizon is, from what your goal of that money is, um, all the motivation behind it. So everyone's entitled to whatever they want to put their money towards. It's their money. So I try not to get caught up in that. I think there's a lot of good things in Twitter.
Absolutely.
So kind of dovetailing from that, um, talking about that experience as a corporate banker and just that unique position and perspective that you got to gain through meeting these entrepreneurs and seeing their businesses grow and probably seeing some bad business plans as well as good
Oh yeah.
ones. um, I would have to think that just that gives you an edge and a insight and appreciation for leadership and a good business plan.
No, absolutely. I've been in the Middle East now, in the UAE for 15 years. So I've seen entrepreneurs from every background, every country, because this is a very multicultural country. It's filled with expats, right? So I've seen people from various countries, and it's so interesting the unique way they think just because of where they come from, the experiences they've had in their childhood, the way they manage money, the way they think about money, in fact, So you can totally tell what kind of a background someone's had. Someone who's like self-made, no family money, he thinks very differently from someone who's got family money, and is managing a family business. So yeah, it's very interesting. And what's even more interesting is you will find people who are so sane, brilliant. They make absolutely the most brilliant decisions, and then they'll go and do something completely odd, and you think, what's going on here? I mean, this guy is supposed to be a super leader, a great entrepreneur, and how did he make this decision? And it ends up there's some story, something that happened to him or somebody he met at some point in his life, and it's an emotional decision.
Hmm.
So uh, it's really interesting to see people how, you can be completely rational about 99% of things, but then suddenly you'll just make a very, very emotional decision. So yeah, I mean, all of this is what makes it very interesting, right?
Yeah, and understanding what makes a successful business, what makes a sustainable business. I can't remember the specific statistic, but I want to say it's like if we were to go back 15 years on the S&P 500, 92% of those companies are not in the S&P 500 anymore. And it's
That's right.
really mind-boggling to think about of um, the switch and evolve of industry and sectors, and now we're living in this technology age, which I feel like technology will always be a part of our life. It's advanced so much moving forward, and we've put so much innovation in that. I think it propels things and creates new opportunities, and all the work that was done 40 years prior, was leading up to this. And Kathy Wood actually commented that on an interview this morning on CNBC, talking about that. And um, it just, it's so easy to kind of almost fall in love with a company or an idea or sector and not realize that it could be gone in a couple of years, right? Like things can
Yeah.
deteriorate, and culture dictates a lot of different things with investments and trends. Um, we had the boomers, we had the Gen X and Gen Z and millennials and all these different generations, and the priorities change, right? Like we now see so much around ESG investing and responsible investing from that perspective, and prioritize. And so you have to keep up with it, because
Sure.
you can't think that just because something had great returns at one point, it's going to continue. You look at companies like IBM, was a powerhouse for so long, and now it's kind of traded sideways for a long time, right? And it's trying to reinvent itself. Would love to hear your take on just the unique characteristics that you got to observe as a corporate banker, on, or maybe just your philosophy on what makes a long-standing sustainable business that lasts 20, 30 years.
Look, I think, let me tell you something very interesting. When entrepreneurs start out, yes, fine, they have a big vision and all of that, but they don't start out thinking that this company is going to exist in 20 years. Okay. They start out thinking there's a need, there's a gap in the market. I want to fill that need or gap. Okay. And once they get started, money is tight, funding is difficult, so many challenges. I mean, every business has 100 more challenges than you ever thought would happen, right? So as they get into it, honestly, they're just trying to survive for the next 1 year, 2 year, sometimes even 6 months. And this is very, very real. So it's not until the company reaches a certain critical mass and then you bring in a proper corporate team that they start planning for a 5 year, 10 year, 20 year horizon. So when when you say that a lot of these companies have, sure, the shift in industry or the shift in technology, this is really, yes, it is something. But then the other side of it as well is that companies have always been failing, and it's not because of the industry or anything of that. And I wouldn't even say because it's poor planning, because it is challenging. It is challenging to survive. And not everyone starts out thinking that I'm going to be here for the next 50 years. They
Mhm.
want to feed their family. They want to make a name for themselves. So it's basically, what am I going to do in the next year, 5 years. And as you start and as the challenges become even more challenging, let's say,
Sure.
that time horizon starts to decrease. And suddenly you're just thinking, what am I going to do in the next 6 months? And I say this a little bit from personal experience as well, because in 2019, I started my own company, an advisory firm. And okay, so I had this whole big picture in my head of what I was going to do and all of that. But a few months in, I realized, let's just throw out this business plan. This is not how it works. And it was more about taking it one step at a time. So I think when you talk about companies failing, a lot of it comes from just the challenges of operating a business. And this is yet again another reason why I say I have immense respect for anybody who's made it. Whether it's a great business or it's an okay business, doesn't matter. It's really, really hard. And
Yeah.
you really have to respect that. It's never easy. The amount of work and stress and, am I going to make money? Am I going to be able to feed my family? Am I going to be able to pay the bills? It's a lot. And it's amazing for people who do succeed, but not everybody had this happy look when they first started out. So that's something to always remember when you're looking at companies and criticizing companies, you
Sure.
know.
Sure.
Uh,
So with that being said, is there certain characteristics that you look for in a leadership team and in a company in general that gives you a little more confidence that they're going to be around for a little longer? Maybe it could be the business model, maybe they have high gross margins and it's reoccurring revenue, or the culture that they've built. Would love to hear just some things that maybe give you a little more confidence in certain holdings than others when it comes to sustainability and long term.
sure. So I think one thing about leadership is what I like to see is someone who can pivot, so someone who, I mean, it's not always easy to make those decisions because you don't know if you're making the right decision, but at least someone who is listening to the market, right? And who's listening to what's going on. There are some people who have their blinders on and they think, okay, I know what I'm doing. This is my business, and that's that. But we're living in an ever-changing world, as you just said, right? Stuff that we can see and do now, we never even thought about this 20 years ago. So a guy who just doesn't decide to evolve, he'll die. It's as simple as that. And you can ignore technology for just so long, or you can ignore these changes for just so long. Eventually, they will come back to bite you, right? So what I look for is someone who's open to listen, because that's so very important, right?
It's kind of
And
rare.
it is, and it's especially rare with entrepreneurs. I mean, when I'm advising entrepreneurs, like people who've started, they think they know exactly what they know, and they're not wrong, by the way, because see, many of these are probably engineers or scientists or whatever. They know their job, they know their field, okay, but I know mine just as well. So if you want financial advice, listen to the experts, right? So if you want technological advice, listen to the experts. You know your job. So if you want me to listen to you, then you should be open to listening to other people as well. So yeah, I think it's not just so listening. I think is very important, and being able to adapt to that. So I understand that bigger companies can't always make those moves very quickly,
Mhm.
but I also think where there's a will, there's a way. I
Mhm.
mean, look at these people, look at Google, look at Apple, the mammoth companies, but they still make changes. Look at Nike. I mean, when the pandemic started, they were so far off in their DTC and tech
Mhm.
offering, And they did it like that because they knew that was going to be the only way that they would make money during the pandemic, right? So they sped up everything. Disney, seriously old company,
Yep.
but they sped up their offering. They rolled out whatever they needed to. They worked overtime. They knew that their parks, one whole part of their business was gone, and
Right.
they didn't know for how long, right? So they had to fill the gap. So as much as you'd like to criticize them for not having enough subscribers, I think they did a fantastic job.
Look
They're
at
huge.
look at Zoom. Do you think Eric Yuan thought he was going to have that many customers and
Absolutely
security
not.
challenges? And I love how Eric owned the encryption concerns and challenges that people were saying about really was it full end-to-end encryption, and he just took ownership of it. And we don't see that a lot in with CEOs to say we messed up, we're going to fix it, we're going to slash all of our R&D budget, we're going to go correct this, and you'll have a better product right away. That shows.
That's another thing. Yes, absolutely. And that's another thing, humility. Okay. I think most entrepreneurs at some point, because they've made it, they become arrogant, which is fine. I don't mind a little bit of arrogance. Everybody should have or take pride in their work, and you're entitled to some arrogance. But uh, you need more humility than arrogance, right? You need to balance it out because at the end of the day, it all goes back to the same thing, being able to listen and adapt.
Mhm.
You either adapt or you die. It's as simple as that. So whether it's with the changing technology, impact investing, whatever, the market changing, if you don't change with the market, you will die. Nike again, another. Every year they come up with a different shoe. They come up with a different sponsor. They've had so many issues. Look at them. Look at their past. They had these child labor issues. They had enormous problems,
Mhm.
um, and now they're at the forefront of actually pushing the social agenda, right? They're the ones who said we're not going to sell in China because of the poor labor practices there. So people change and companies change, and if you don't, that's it for you. So yeah, when I look at a company, this is something that I'd really like to look for: a little bit of arrogance, a lot of bit of humility, and the ability to change and adapt.
So this leads into, I know what our viewers want to hear from you. First off is your take on Palantir, and why you've invested so much of your portfolio, with that being one of your larger holdings.